you've rightly noted that our trading income was up, but it's basically three components if you look at the details. You have trading in treasury bills, government securities, bonds, and also our derivative earnings. Trading in treasury bills is about 80 billion out of the figure you have there. That's close to 60%, and is due to the activities in our treasury department. We'll continue to be very innovative. We have very qualified people in our treasury, and we expect that for 2018, we should be able to repeat the same thing. In terms of yield, yields have dropped in securities generally, but with increase in volume, we will expect that for 2018, we should come out with a very respectable figure.
I also noticed that the cost-to-income ratio also fell. And of course, you're also doing well in that department. You continue to optimize costs. But then this was also despite a rise in your capital expenditure, just operating expenditure rather. Tell us about that.
Well, it's a cost-to-income ratio. We've been working on it over time. And it's something that we'll continue to work on because we know that we have to become more efficient across board. And that actually is the driver for the reduction in our cost-to-income ratio. We expect that for 2018, we should still come down in terms of cost-to-income ratio. And it's all about efficiencies, looking for new ways to do things we've been doing, looking at how we can do them differently and more efficiently.
For your loan impairment, we also saw that tick up. Can you tell us about that? We know that that's still a big issue within the industry. Tell us about that.
Well, I'll say if you look at the NPLs, you'll find out that some of the challenges we have is actually focused on just some specific sectors. You have the oil and gas, which is a major one there, and we also have one in power. So they are really not a general thing. They are just two specific sectors, which of course, you know, as far back as 2015, they've been challenged, particularly the oil and gas. But beyond that, I would say we are quite good.
Let's talk about your loan book growth for 2018. We know that, because I've spoken to a number of CEOs, and they all hold a very conservative view and outlook for their loan book growth. But tell us about Zenith Bank.
Well, I'll probably take you back. If you look at the economy itself, we were in recession in 2016. And 2017, inflation has been trending down from January 2017, even to date. We are out of recession, and we are actually moving gradually in terms of growth. And you will find out that you will not expect that loan growth to be very, very bullish because the economy is just on a path of recovery. But we still expect that by and large, we should be able to do something close to 10% in loan growth.
Would you be looking at new opportunities, new different sectors, or the traditional sectors, power, oil and gas, and some other specific deals?
Well, I'll say we look at all sectors. The important thing is the safety of our funds, the purpose of the loan, and the specific obligors. Where we have obligors that meet our RAC, we will definitely support them.
Let's talk about the e-channels. It's huge for banks now, and I've seen the numbers. Banks are making a lot of money from that platform. But then on the other hand, we have the fintech companies who are also providing similar services to customers. And I've had this conversation with a number of bank CEOs. I've talked about the fact that the banking of the future, how it's going to be shaped. We're looking at the way traditional banking models are changing. We're seeing fintech companies coming to take a part of the market. And I'm thinking, what kind of relationship going forward will banks have with fintech companies who are also providing similar services? What are your thoughts?
Well, I'll say the future has actually come. All what you've been talking about in terms of digital banking is here today and is here to stay. We don't see fintech companies as competitors. We see them as people that we can cooperate with, we can partner with, and we can collaborate with. And at the end of the day, what matters is it should be a win-win for everyone, and particularly our customers. We should be able to offer convenience and alternatives. So it's not about making money and all that. The key thing is, are you able to serve your customers even better? Are you able to provide convenience? Once you do all this, then in terms of revenue, the revenue will naturally come in. But for the fintechs, we are not competing with them. They are not banks. The key thing is that we are going to continue to collaborate with them, and it will be a win-win for all of us.
I know you say that they're not banks, but you said the future is already here. We're hearing that the issue of brick and mortars, that will reduce. I mean, it's just all on your mobile phone these days. So I'm thinking, what are your thoughts on that? The fact that, I mean, brick and mortar, I was going to ask you about footprints across the African continent, if that is going to continue with brick and mortar, or you don't see that happening anymore?
Well, you see, across Africa, our strategy remains the same. Nigeria is our major focus. We're already very, very strong in Ghana and two other West African countries. We don't have that ambition of opening new outlets in other African countries, at least not for now. But in terms of the focus on digital banking, that is a major focus for 2018. And it is actually hinged on our mobile technology.
Is it going to be a significant, will it drive your earnings? Would it have a significant contribution to your earnings for 2018?
Yeah, absolutely. If you look at 2017, we've been improving even over time in terms of our retail, which is anchored on mobile technology. So for 2018, we still expect further growth in that particular space. In the foreseeable future, we'll expect continuous growth in our retail and digital banking.
Let's talk about the economy. We're coming out of a recession. We've seen inflation trending lower, and the business environment appears to be improving. We're seeing better indices with the ease of doing business. Monetary authorities, they still have their work cut out for them in terms of driving growth on one hand, and of course ensuring that there's exchange rate and price stability. What are your thoughts in terms of how that is going to play out this year, especially for the monetary authorities, and how they work in synergy with the fiscal authorities this year?
Well, I think I can talk about the monetary authorities, and I'll say they've done exceedingly very well. The way they've managed the exchange rate issues. We have reasonable stability now in terms of exchange rate, and there is better confidence. If you look at the flows in the I&E market, you will see that there is a lot of confidence in the foreign exchange market now. I will expect that 2018 should be a year of consolidation, and hopefully we should be able to gravitate towards a single exchange rate regime. But by and large, we expect 2018 to be much better than what we saw in 2017.
What would you say, as a bank CEO, your biggest challenge is right now? When you look at the environment, you look at the sectors, how strong or how weak some of them are, and of course the need to make money, satisfy shareholders at the same time, be that bank that is that has a great relationship with its customers. Your thoughts on that? Well,
you see, we will always have challenges, not just in banking, in all businesses, even in all spheres of life, both from a corporate perspective, even and as individuals. See, what we as bank, what we've always focused on is we have all these challenges. What are the risks inherent in those challenges? And what are the mitigants? So we focus on how we can turn these challenges into opportunities. I think that's really what Zenith Bank stands for.
Now, if you also look across the sector, and sometimes when I read some of the comments put out by ratings agencies likes of Moody's, Fitch, it's sort of a mixed message. 1 minute they talk about the concerns around non-performing loans, loan provisions and all of that. The next minute they say, oh, the outlook is bright, the outlook is good going forward, but there's some risks that the banks, the regulator needs to focus on. I'll recall the policy on, of course, the capital adequacy ratio and the fact that the CBN is asking banks to retain earnings, as it were. So when you think about all those issues, how do you think that is shaping the banking industry, or how it will shape it going forward?
You see, the whole objective is to make the banks stronger. And by implication, the financial system will become much more stronger. If you have a very strong financial system, then in terms of investor confidence, it will rise. So that's really what the monetary authorities are focused on. When the rating agencies talk about the need to strengthen the financial system, the need to, and when they endorsed the recent policy of CBN, which was modified to say, look, if you don't miss a particular benchmark, you should not pay dividend. I think it's just an endorsement on what the central bank is doing, that they are moving in the right direction. But I think by and large, the key thing is, how do we continuously strengthen the financial system? I think really that, and it's very, very important that any sound financial system is important for the economy to grow and to thrive.